Hello and welcome to Big Deal. Now, the overall deal space is on a slow lane because we are already into the earnings season. But remember, some of the large transactions in the private equity space have really taken place, but the private equities have really made some hefty returns. So we will talk about private equity exits and how's the trend going to continue with Sanjeev Krishna of PwC, who will be joining me later in the show. And right now, we have a special guest with us straight from US. Alka Banerjee of S&P Dow Jones Indices is right here with us. Remember that passive investments is really picking up in India. Globally, it has been doing the rounds for a while now, and how it's gaining traction in India is what we are going to discuss with Alka. Alka, so good to have you on CNBC TV 18. Now, of course, we saw a little bit of passive investments in the form of EPFO investments as well as CPSE, but they are still new for India. What does it mean and how is it gaining momentum?
So thank you, Nisha, for having me. Passive investment basically means investing in a rules-based format, which basically gets you market returns. So, for example, the S&P BSE Sensex 30 is 30 largest stocks in the Indian market, and those are packaged together, and you get a single number which tells you what the performance of the market is in that large cap space. Similarly, we have indices around the world. The S&P 500 tells you 500 largest US cap stocks in the US market. So it's a very simple, rules-based, transparent way of investing where the investor knows exactly what he's buying, and you also get returns which are very similar to what the market is doing. There is no attempt to outperform or underperform the market. You're actually capturing a segment of the market and representing that in the index. Now, in India, which is always an active manager's heaven, and that's very typical of an emerging market because there are many inefficiencies in the market that can be picked up by active managers. But as the economy improves, the markets become more transparent, the room for passive becomes much more clearer. What happened recently is that the Employee Pension Fund, which is the largest pension fund in India, decided for the first time to make some investments in the equity markets. The reason is, as the economy is improving, as the economy is growing, the interest rates are falling, as they should, as inflation is coming down. So historically, the income for the EPFO was through interest rates on fixed income securities issued by the government of India. When that income is becoming less, almost stagnant, then they have to look to diversify the income opportunities. And the equity market is a natural selection. Pension funds around the world invest substantial chunks of their assets in equity markets, and that is how they actually manage their pension and asset liability and asset management. So they took a historic decision to put a 5% of the incremental EPFO portfolio in equities, and they took a very conscious decision that they do not want to take a bet on any particular active manager. They will just try and get market returns.
So make it more scientific and no room for human error.
Exactly. And also cost effective, because here when you're doing a passive investment, it's very cost effective because you're not spending time and money on research and frequent trading. You create a set of rules and you follow those, and there's minimal research involved in that sense. So the cost is much lower. A typical active manager will be 100-200 basis points of expense, while a passive investment is available to you anywhere from 10 to 30 basis points. So the cost differential is huge.
So in this rule-based investment that you're talking about, of course, we really pay a lot of attention to the active fund manager. Who's the fund manager? Who's really taking care of the fund, and how have the returns been? Now, how do you compare an passive investment or index-based investment to an active fund manager's investments? Have you done any comparisons, and which one has really outperformed?
So we actually at Standard & Poor's, we publish reports called SPIVA reports, and we publish these for every country around the world every year, where we measure the performance of the leading benchmarks of that country against the active space that follows that index. For example, in India, the S&P BSE 100 is a favorite of all the large cap fund managers as a benchmark. We measured that performance of the index against the performance of the large cap Indian funds. And we found that 66% of the large cap Indian active funds have underperformed the S&P BSE 100. That's a large number, 66%. What happens at any given time, a fund manager could be doing well, and he could be doing well for 1, 2, 3, 4 years. Is he going to do well for 10 years consistently? Is he going to do well for 15, 20, 30 years? So at any given point of time, some managers will be doing better than the index, but not all. And the same manager will not be doing better than the index every time. So that's why what you're saying is, I'm putting my bet on the market returns. I'm going to get the market returns, and that's the best option for me, because I don't know which active manager will consistently outperform the index over a long period of time.
So how many, how many such products do you see in India globally? What are being used and what can really come to India in recent times?
Yeah. So we have a partnership with the BSE, which is called Asia Index Private Limited. We have acquired all the indices plus launched many more. So currently we're calculating about 60 indices for the Indian market itself. Globally, S&P Dow Jones Indices calculates 1 million indexes per day. We cover 83 countries and we have indices for every kind of country, sector, size, etc. So there is a lot of room for growing into this space. A big development that has happened more recently is what we call smart beta, where instead of just looking at the price movement of a stock, we look at other characteristics. Is the stock the highest dividend paying? Is the stock with the best fundamentals like PE ratios? Is it the stock with the least volatility? And we identify stocks based on that and create an index. And that is becoming very popular because it's immediately stepping into the space that active managers were in earlier. And now you can get that same strategy, the same intelligence in at a third of the cost or even less.
And talking about not just returns, but environmentally sensitive, socially responsible, even corporate governance-wise of higher standards. These are also the areas now the investors are very, very clued in about and very critical about.
Absolutely. So these, as I said, any company to be a really long-term surviving company, they have to keep every stakeholder in their ecosystem satisfied and happy. That means clients, it means employees, it means communities where they operate. So environmental issues have become very critical for that. You can't have companies creating oil spills or ecological disasters because that can cause litigation, it can cause stoppage of work, it can cause a lot of resentment. You can't have companies who don't have a proper board management because that can create situations like Satyam, where there was a complete fraud. So independence of boards, independence of diversity of boards, proper shareholder rights, these have become very important for shareholders. Similarly, social issues like having the right employee structure, because you don't want to have lockouts and strikes, and people are very aware of their rights right now. You want to have proper customer redressal systems. So this is basically making sure that your ecosystem around which you operate, every stakeholder is satisfied. And that's why ESG has become so important for an investor. That are you looking after the entire community, or is it just about making quick profits?
So these are the new rules of investments that are in the market, and India is also gaining traction in all of them. Alka, stay on with us. We'll slip into a short breather, but there's lots more to talk about. She's very clued in on the global markets. We'll touch our base on that particular bit when we return.